Navigating the investment abyss. The paramount importance of a margin of safety in value investing. In the captivating realm of value investing, where fortunes are forged and financial destinies unfold, the concept of a margin of safety emerges as a guiding principle that separates the astute investor from the reckless speculator. At its core, the margin of safety is a time-honored philosophy championed by legendary investor Benjamin Graham, the intellectual progenitor of value investing. This enduring principle encapsulates a profound truth. The prudent investor must build a protective fortress around their investments to weather the storms of market volatility and unforeseen challenges. Defining the margin of safety. The margin of safety is the chasm that exists between the intrinsic value of a security and its market price. In essence, it is the cushion that shields investors from the inherent uncertainties of financial markets, offering a buffer against unforeseen events that may cause a stock's price to plummet. This crucial concept embodies the spirit of conservative investing, emphasizing the importance of acquiring assets at a price significantly below their intrinsic value. Picture a seasoned value investor eyeing two stocks, Company A and Company B. Both companies exhibit promising fundamentals, with robust earnings, healthy balance sheets, and favorable growth prospects. However, Company A is trading at a price significantly below its calculated intrinsic value, while Company B is priced close to its estimated worth. The astute investor recognizes the margin of safety inherent in Company A. Understanding that even if unforeseen challenges arise, the substantial gap between market price and intrinsic value provides a protective shield. Protecting against market vicissitudes. Financial markets are a maelstrom of emotions, speculation, and unpredictable events. The margin of safety serves as a lifeboat in this tempest, offering investors a measure of protection against the capricious whims of the market. Consider the impact of an economic downturn, a sudden industry-wide disruption, or a market correction. Investors armed with a margin of safety are better positioned to weather such storms. As the gap between market price and intrinsic value provides a safety net, preventing a catastrophic erosion of wealth. For instance, during the global financial crisis of 2008, companies with robust margins of safety proved more resilient. Investors who had diligently adhered to the principle of buying at a significant discount to intrinsic value found solace in knowing that their investments had a built-in buffer, shielding them from the full brunt of the market downturn. Guarding against inherent uncertainties. The business landscape is fraught with uncertainties, ranging from economic downturns and regulatory changes to shifts in consumer preferences and technological disruptions. The margin of safety acknowledges the inevitability of these uncertainties and offers investors a strategic advantage. By acquiring assets at a price below their intrinsic value, investors mitigate the impact of unforeseen challenges, creating a margin that allows for adjustments and adaptability. Imagine an investor considering an investment in the retail sector. Company C, priced at a steep discount to its intrinsic value, offers a substantial margin of safety. In contrast, Company D, though fundamentally sound, is trading close to its estimated worth. If a sudden shift in consumer behavior or a technological innovation disrupts the retail industry, the investor in Company C possesses the flexibility to navigate challenges. Knowing that the inherent margin of safety provides room for adjustments and strategic maneuvers. Facilitating long-term wealth creation. The margin of safety is not merely a defensive strategy, it is a cornerstone of long-term wealth creation. Investors who prioritize a margin of safety are not swayed by short-term market fluctuations or the allure of speculative gains. Instead, they adopt a patient and disciplined approach, seeking investments with a clear buffer between market price and intrinsic value. Consider two investors contemplating the purchase of a dividend-paying stock. Company E investor X is enticed by the recent market hype surrounding the stock and buys at its current market price. Investor Y, guided by the principle of a margin of safety, patiently waits for the stock to dip below its intrinsic value before making a move. Over time, as market exuberance subsides and rationality prevails, Investor Y's adherence to a margin of safety becomes evident. Not only does Investor Y secure a more favorable entry point, but the inherent cushion also provides a safeguard against potential downturns. Fostering disciplined decision-making. The margin of safety is not a mere numerical calculation, it is a mindset, a discipline that governs the decision-making process of prudent investors. It instills a rational and measured approach, steering investors away from the allure of speculative bubbles and overvalued assets. By demanding a tangible buffer between market price and intrinsic value, the margin of safety acts as a guardian of capital, preventing impulsive decisions driven by market euphoria. Imagine an overheated market where a particular sector is witnessing a frenzy of buying activity. Investor Z, guided by the margin of safety, resists the temptation to join the speculative fervor. Instead, Investor Z patiently waits for valuations to align with intrinsic values before making investment decisions. This disciplined approach not only shields Investor Z from potential market corrections but also positions them to capitalize on opportunities that emerge when irrational exuberance gives way to rational valuation. Conclusion. In the tumultuous landscape of value investing, the margin of safety emerges as a beacon of prudence and resilience. It is a concept that transcends numerical calculations, encapsulating a philosophy that reverberates through the corridors of financial wisdom. As investors navigate the complexities of the market, the margin of safety stands as a steadfast companion, offering protection against the uncertainties of the investment abyss. It is a principle that implores investors to embrace patience, discipline, and a keen understanding of intrinsic value, guiding them on a path toward sustainable wealth creation and enduring financial success.